You owe back taxes, and the IRS has filed a tax lien against your home and your other property. If you're like most people, you're concerned that the government might seize your property to pay the tax debt. You've seen stories about how the IRS can take your home, your car, or other property and sell it at auction for pennies on the dollar. In this video, I'm going to discuss IRS tax liens and what happens once a lien is filed and how you can get rid of the lien. I have a tax lien. Will the IRS take my house? That's the topic of today's video. On the other side of the break.
1877 Levy King, Levy Levy King, 1877 Levy King, LevyKing.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1877 Levy King, LevyKing.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I'll show you how to stop IRS liens, levies, and garnishments without paying the tax in full, how to set up the payment plan you want and not the one that they want, and how you can potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years, and you can buy it right now for $19.99. But I want to give you a copy of the book absolutely free. Just go over to my website, www.endthetaxnightmare.com, and enter your name and email, and I'll send you a copy right away. No charge, not even for shipping, totally free. Before we go any further with the video, please take a moment to subscribe to our channel, smash that like button so you'll be notified each and every time we drop a new video. And don't forget to follow us on Facebook and like us on Instagram. Okay, guys, let's dive into today's content. So you've received an IRS notice of federal tax lien. You're kind of freaking out a little bit because you're wondering what will happen next. Will the IRS show up at your home and kick you out on the street? Will they take your car and sell it at auction? What about your bank accounts, retirement accounts, investment accounts? Are those at risk? I'm going to give you the bottom line right up front. It's unlikely that the IRS will seize any of your physical property to satisfy a tax debt. This includes your home, your car, your boat, etc. Technically, they can seize any of these things, but they probably won't. When does a tax lien arise? Understand that there is a difference between a tax lien, which comes about automatically anytime you owe a tax debt and fail to pay on time. If you don't pay, the tax lien automatically comes about to secure the government's right to collect the taxes owed. The tax lien is sometimes referred to as a secret lien, a silent lien, or a private lien. It's not something that is made public record. Therefore, it has very little practical impact on your financial life. Just know that if you haven't paid your taxes, the lien exists. Now, this is not to be confused with a notice of federal tax lien. The NFTL is filed at the local county courthouse in the county where you live. According to your most recent tax return, the NFTL is public information and could have a huge impact on your financial life. The purpose of the notice of federal tax lien is to put the public on notice that the IRS has a priority interest in all of your property and could seize that property at any time to cover your tax debt. Historically, they haven't done that, applied that tax lien until you owed about $10,000. Right now, it's about $25,000. What does the tax lien attach to? The tax lien attaches to essentially everything, including all property you currently own and any property you will acquire in the future. As long as the tax lien is still in effect, it attaches to the property. This means that the tax lien attaches to your home, your car, and all the money in your bank account, but it also attaches to any cars you may buy in the future or money that you may deposit into your account later. The point here is that the tax lien attaches to all property. Current assets and future assets are encumbered by the lien. Does the IRS seize and sell property? So the next question is whether the IRS will actually seize and sell your property to pay the tax debt. The answer is probably no. That's unlikely to happen unless you are a celebrity, a politician, a drug dealer, a tax protester, or some type of tax scam promoter. The IRS will, from time to time, seize property from a celebrity or other high-profile individual to make an example of that person. The IRS will also seize physical property from individuals convicted of a crime. For example, a drug dealer or a Ponzi schemer or some type of fraudster who buys home with dirty money but didn't pay their taxes. What I've seen most commonly is seizures from those people that are so-called tax protesters. A tax protester is someone who claims that there is really no legal authority requiring you to pay taxes. I've also seen the government come down very hard on individuals promoting these schemes to other people and encouraging other people to evade their tax obligations. Those people are playing with fire, and eventually they all get burned. No surprise. But for an ordinary taxpayer who's not involved in any of these shenanigans, the likelihood of the IRS rolling up and seizing your home or your car is very, very low. Can they? Yes. Will they? Probably not. In fact, the IRS data book tells us that in 2017, the IRS issued nearly 500,000 notices of federal tax lien, but conducted just 420 seizures nationwide. That comes out to 0.001% of all tax lien cases, which actually result in a seizure of property. In those 420 cases where the IRS did seize property, the taxpayers' balances were about $519,000, including penalties and interest. So we see that it is unlikely that the IRS is going to come and take your house. But just because they don't want your house does not mean that they don't want their money, or that the tax lien is no big deal. The existence of the notice of federal tax lien can damage your reputation, impact your credit, cost you your job opportunities, or prevent you from buying, selling, or refinancing your home. How to get rid of a tax lien? There are several strategies for dealing with a tax lien. Let's discuss just a few of them. Lien subordination is where you get the IRS to agree to allow another creditor, the mortgage lender in this case, to hold first position above the IRS in terms of priority. Lien subordination is typically done when you're trying to refinance your property. The IRS will agree to subordination if you agree to pay off the tax debt with the proceeds of the refi. A certificate of lien discharge, Form 669C, is where the IRS allows certain assets to be free of the tax lien. In my experience, a discharge is more common in situations where the seller owes back taxes and the tax lien is preventing him from selling the home. The IRS may discharge the home from the tax lien and allow the sale to take place if the seller's tax debt can be paid at closing with the proceeds of the sale. Lien withdrawal is where the IRS issues a Form 10916C, which removes the notice of federal tax lien from the public record, even though you've not actually paid the tax debt. The debt still exists, and the IRS's right to collect the tax debt is still there as well. This does not prevent the IRS from selling your property to recover the debt, nor does it remove the lien. It just removes the public notice. An installment agreement or offer in compromise are valuable options to pay off the tax debt as well. Once the tax debt itself is paid, the lien against your property must be released. You can set up an installment agreement to pay the tax debt over several years. The installment agreement will pull you out of collections and remove the risk of the IRS seizing the property, as long as you don't default on the payments. The problem with an installment agreement is that it takes a long time, and the lien will remain in place until the entire balance is paid in full, including penalties and interest. The offer in compromise, on the other hand, allows you to release the lien much faster than an installment agreement, and you could potentially pay less than you actually owe on the tax debt. For example, we had a taxpayer that owed over $100,000 in back taxes. The IRS filed a tax lien against his property, and he was able to settle his tax debt for less than $2,000 via an offer in compromise. The IRS issued a notice of tax lien release, and he was then able to refinance or sell his property without worrying about having a lien. At this point, you're probably wondering which strategy is best for you. What's your best option for getting rid of your tax debt and the tax lien? If you owe back taxes to the IRS or the state, I want you to know that there are special programs in place to help you get a fresh start and to get out from under the tax debt. But how do you know if you qualify? You see, no two cases are exactly alike. So how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified for a fresh start. Just head over to my website, www.levyking.com, or click the link below. Follow the prompts and answer a few simple questions, and we'll help you figure out your eligibility. That website again is www.levyking.com, or you can give us a call at 1-877-LEVY-KING. Well, that's it for this week, guys. Talk to you later. Bye.
1-877 Levy King. Levy King.